All right, welcome to Meet with an Expert, Life After College with Student Loans. This session is part of our Maroon Money Month, which is sponsored this year by DACU. Tonight, we're going to focus on what to expect when your student loans go into repayment and the information you need to know about choosing repayment plans. My name is Shalise Connors. I'm the Executive Director of the Student Money Management Center. And let me first begin by welcoming all of our participants, but particularly congratulations to all of you who are graduating in May. What a huge milestone. We are very, very excited for you. This is an incredibly fun time especially for our May grads. The Student Money Management Center serves all students on all three of our campuses. We are truly an amazing resource. We're glad that you're taking advantage of us today, and you can continue to use us after you graduate when you are a wonderful alum of Texas Woman's. We bring you programs such as this one tonight and so much more throughout the entire school year. So please follow us on Instagram or Facebook. Our handle is at TWU Maroon Money. Online with us this evening, we have Cameron Penny. She is our Student Money Management Center Financial Resolution Coordinator, and our experts from the TWU Office of Financial Aid. We have Brandy Henry with us already this evening. And if we have more join us, we will make sure to introduce them. This program is also sponsored by the Spendwell Committee of Texas Women's University's Health and Wellbeing Initiative, and we always appreciate the continuing support of their leadership, including one of their co-leads, Stephanie Compton, who is with us today. And I apologize for the whining dog in the back. Our featured presenter this evening is Sergio Gonzalez with Sallie Mae. I'll introduce him here in a moment. Just a few housekeeping items. Again, we did say that this is being recorded and it will be on our YouTube channel. Please feel free throughout the presentation to put questions in the chat. Cameron is going to be monitoring the chat box. Or, if you want to unmute and ask a question, we will have plenty of Q&A time at the end as well. If you'd like to switch your viewer to speaker viewer only, so you can see the speaker on the slide of your slide deck, please do so. You can also turn off your camera if you would like as well. We do want to maintain your privacy though, so if you have a particular question about financial aid, please message Brandy Henry directly in the chat. You can choose her in the chat when you choose the dialog box, the drop down, choose Brandy Henry if you have a specific question about your financial aid account. We want to maintain your privacy and respect that, so we don't want to put it in the general chat, okay? After we're all done and you exit out of our Zoom today, you are going to receive a short, really quick 6-question anonymous survey about the session. It's going to pop up. Please just take a couple minutes and answer that for us. It's just yes and no, and you can provide your feedback because it really does help us improve our programs that we offer for students in the coming months and especially next year. So let's talk about our presenter. We are very fortunate to have an expert with us tonight to help us navigate student loan repayment. Sergio has been in higher education since 1995. He joined Sallie Mae in 2005 and is currently the Director, Assistant Region Head of the Sallie Mae West Region. He is responsible for supporting colleges, universities, and high schools and college readiness programs in Texas as well as New Mexico. He is fluent in Spanish and lives in Houston with his wife and their dog. And at this moment, I'm going to turn the program over to you. Thank you so much, Sergio, for being with us.
No, thank you, Shalise, for the invitation. And again, I echo Shalise's remarks of congratulations to you all who will be graduating in May or this year. And maybe we'll have some that are maybe graduating next year, and it's never too early. So I think it's always important to understand the process when it goes into loan repayment. So thank you for that. And let's just go ahead and get started. And just to have enough bandwidth here, I'm going to turn off my camera and make sure to turn it back on when we get back to Q&A, but give me one sec here. All right, so let's get started, right? So I want to talk to you about how to get ready to pay your loans if you borrowed any student loans. But with that, I wanted to make sure that you understand that there are two main types of student loans, right? There's federal loans and there's private loans, but they're not the same type of loan, right? So what is the difference? The difference is that federal loans are loans that are provided to you by the federal government. They have fixed interest rates, which means that that rate will not change for the life of the loan. It'll stay that same rate until you finish paying it off, right? And usually federal loans do require, not usually, they do require you to have and file a FAFSA in order to be able to get federal loans. Whereas private loans, those are provided to you by banks, credit unions, and financial institutions. They usually offer both variable and fixed rates. And the difference between variable and fixed is that a variable rate can go up or down depending on that index rate on a monthly basis, right? And you'll find that private loans offer you both options. And then if you're an undergraduate student who doesn't have enough credit established, you may need a cosigner. So usually required to have a cosigner. Again, if you don't have enough credit or your credit isn't great, that a cosigner may be an option for you as well, right? So those are the big differences between the federal loans and the private loans. But I also wanted to make sure that you understood that there are some big changes coming to loan repayment and federal loan programs in general, right? I won't get into too much specifics, but what I really want to focus on is that last bullet that you see there, federal repayment plan changes. So there's some big changes coming July 1. The good thing is for those of you who are graduating 2026, you do have more options than anyone outside after July 1 borrowing a new loan. There will be limited in the amount of repayment plan options available, but we'll get into all of that. But I just want to make sure that you understand that there are some big changes coming. And basically, any new loans after July 1 will have the option just two repayment plans, whereas you, who may be graduating this year, will have about 5 to 6 available for you. But we'll get into all that in just a minute. So you're probably thinking, well, gee, I think I borrowed some loans, but I just don't know if they're federal or private loans, and how do I find out where my loans are at, or how do I get access to them, right? So if you borrowed any federal loans, you're going to find those at studentaid.gov, right? This is the same site that you do your FAFSA. So the same credentials that you use to file your FAFSA, you're going to use the same credentials to get into studentaid.gov to be able to see how much you borrowed, who you borrowed it from, what's the status of your loan, what interest has accrued, the contact information of your servicer. So all that's going to be there. And let me just start with that servicer that you see on the screen. What is a servicer? So the federal government, right, they're the ones who administer this program. But the program is so large that they outsource this to servicers, right? So they're the ultimate contact for you when it comes to your federal loans when you go into repayment. They're the ones who disperse on behalf of the government, and they're the ones who collect on behalf of the government, right? So all that information, you're going to find that at studentaid.gov. So any federal loans that you borrowed, whether it was in grad school or undergrad, whatever the case may be, if you borrowed any federal loans, you're going to find those at studentaid.gov. Now, your private loans, those are different. Remember, those are not federal loans. Those are from banks and financial institutions. So if you're not sure if you borrowed a private loan, the best thing to do is to check your credit report. In that credit report, it's going to list out any loans that you borrowed while you've been in school. And if you see a student loan there, then that will tell you that that is a private loan that you've borrowed, right? So again, annualcreditreport.com, that would be the site to go. It's free. You can do this every year. Every 12 months, you are allowed to go and pull your credit at no cost, right? So definitely do that. And I'll put a plug in here is that you should always be checking your credit on an annual basis. College students are very susceptible to identity theft. So you just want to make sure that no one is stealing your identity and that everything in that credit report is accurate. And if it's not, you can get that fixed as well. But again, this is where you would go to find out exactly what you borrowed, whether it's federal or private, and this is the way to do it. So let's start first with your federal loan programs, right? So I'm not sure if we have any graduate students or if it's all undergrad. So I'm going to talk about all the different loan programs for both type of students. So for my undergraduates, you are eligible if you have financial need for the subsidized loan, right? You have to demonstrate financial need in order to qualify for this particular loan. Again, the FAFSA is what's going to determine the financial need to see if you qualify for this loan. This is probably the best loan to take out. Why? Because The government pays the interest for you while you are enrolled in school at least half time, during your grace period, and during your deferments. So this is the great one to do, right? So, but if you don't have any need or you don't demonstrate financial need, the next best option would be a direct unsubsidized loan. This one is available to both undergrad and graduate students. The subsidized is only available for undergraduates, right? So let's talk about the unsubsidized loan. This one, you don't have to demonstrate financial needs, so you can qualify. And I'll tell you with these loan programs, they're pretty much guaranteed. The only reason why you wouldn't be able to get these loans is that you defaulted on a prior student loan, then that will cause you not to be able to get access to the direct subsidized and unsubsidized loan. Um, but with the unsubsidized loan, um, interest it starts accruing as soon as the money is sent to the school, right? So that is the big difference between the subsidized and the unsubsidized. Whereas the subsidized, the government is paying the interest. On the unsubsidized, they are not, right? And then you have direct graduate plus loans. And this is only available to graduate students. And this is to help them for any gaps that they still have, right? When they got their unsubsidized and that wasn't enough, that they need additional financing, this is another federal loan only available to graduate students. Very similar to an unsubsidized in that you don't have to demonstrate financial need to qualify, and interest begins accruing as soon as the money is sent to the school. And starting July 1, this particular loan will no longer be available to any incoming students. So interest rates, right? So currently we're in the 25-26 academic year. So you'll see for undergraduate loans, those are at 6.39% currently. So maybe you've been at school for 4 years, you can kind of see the evolution and the changes in that rate. So every July 1st, that interest rate is going to change. It can go up or it can go down, right? So you'll notice that it was the lowest at 22-23 at 4.99% and steadily started increasing all the way to 24-25. And it made a little reduction in 25-26, which is good, right? And then for my graduate students that borrowed unsubsidized loans, your interest rate currently is at 7.94%. And if you borrowed a graduate plus loan, that one is at 8.94%, right? And then private loans, those are different type of loans, right? Because you have the option of fixed and variable rates. So you'll find that rates start as low as 2% and as high as sometimes 17%. And all that's going to be based on your credit. So the better the credit, the lower the rate, right? So do know that there's fluctuation there. But again, for private loans, you have the option of fixed or variable rates. So now that you're graduating, if you're going to be graduating in May, so there's this thing called a grace period, right? So this is a period of time where you're going to use this time to, number one, find a job, also prepare for yourself to go into repayment, right? So it's just a period of time of 6 months that's given to you so that you can prepare accordingly, right? Everyone is entitled to a grace period, but I will warn you too that if you take longer, let's say that you want to go to grad school, and if you take longer than 6 months to transition from undergrad to grad school, then payment, when you graduate grad school, you're going to start repayment immediately after you graduate, right? Because you exhausted your full 6 months grace period. Should you transition earlier before the 6 months is over from undergrad to grad school, then when you graduate, you'll have your full 6 months grace period. So, and then any new loans that you borrow in grad school, you'll have a 6 months grace period for those loans. But any loans that you borrowed in undergrad, you're going to start making payments immediately after you graduate graduate school, right? But if you're wanting to align all your loans to come due at the same time, you can contact your servicer and tell them, hey, listen, I have some undergraduate loans that are coming due before my graduate loans are coming due. Can you align them so that they all come due at the same time and they can do that for you? So, what I really want you to do is just kind of get organized during that grace period, right? This is a time when you start planning ahead and making sure that you understand how much you borrowed, who your lender servicer is for both your federal and private loans, If they have an app, I would definitely encourage you to download it because there is where you can update your address, you can update your contact information, you can keep track of your loan payments. So it's very important at this point in time and during your grace period that you're looking at all that so that you're fully prepared to go into repayment. And if you have any difficulties in making payments, there are ways to postpone payments, and we'll talk about that in the next couple slides that are coming up. So here are some resources for your federal loan programs. Studentaid.gov is going to be very helpful for you to navigate this process. There, they're going to have all the different loan repayment options available for you, defining each one of them so that you have a better understanding of how they work. And then they have this really great thing that's called a loan simulator. This is where it basically gives you estimated amounts for each of the different repayment options available so that you can understand what that payment is going to look like and how that's going to fit within your budget, right? So again, this is going to be crucial for you as a great resource to help you get prepared to go into repayment on your federal student loans. Now, if you have any difficulties in making payments on your loans, you do have deferments that are available for you, right? Deferments you have to apply for in order to qualify, right? So let's say my undergraduate students that you're wanting to go to grad school, right? Well, if as long as you enrolled at least half time, you can do what is called an in-school deferment, where you don't have to make any payments at all until after you finish grad school, right? Or maybe you're having a hard time finding a job. You can do what is called an unemployment deferment, where you can defer until you find a job. Another option may be that maybe you do have a job, but your debt to income ratios are really off and you're having a hard time paying this back. You can do what is called an economic hardship deferment. They'll need proof of your incomes and debts so that they can see if you qualify for this particular deferment. And then if you do some fellowships in grad school, there's deferments available for that. And then if you're in the military and get mobilized, you can defer your loans as well, right? But let me just make a quick caveat on this that based on the One Big Beautiful Bill, it eliminates the economic hardship deferment and unemployment deferment for borrowers with an effective date for loans that they receive after July 1st, right? So do you know that? But for you guys who are graduating this year, you still have access to these deferments. And then the other option that you have besides deferments is forbearances, right? So this is different. This is not something that you have to apply for technically. You simply contact your servicer and let them know that you don't qualify for a deferment, but you need to postpone payments for a period of time, and you can do that, right? So it could be that maybe you're having some financial difficulties or you have some expenses that are a little bit out of control that you're not able to pay. You need to focus on paying that and not so much on your student loans. So you're able to do that, or maybe you lost your job, or whatever the case may be, right? Or changes in employment. So a forbearance is definitely available for you. The current rule for forbearances is that you can apply 12 months at a time with 3-year cumulative right after, right? Um, Starting July 1, that's going to change. They're going to do it for up to 9 months and only for a 2-year period, right? Based again on that One Big Beautiful Bill that's changed. So let's talk a little bit about the repayment plan options because that you're graduating in 2026, you do have some options a little bit more than those who will be graduating after 2026. So let me start with the new stuff first, right? So these are the two new repayment options that are going to be offered for any student who borrows a loan after July 1 of 2026. It is a standard repayment term that has up to 25 years of repayment, but it's tied into your loan balance. So it's going to depend how much you borrowed to determine how long you have to pay it back, right? The great thing about the standard term is that it is a fixed payment amount monthly for so many years, again, depending on how much you borrowed. Now, the RAP or the repayment assistance plan, this one is based on your income, adjusted gross income. It is what is called an income driven option that's available that's based again on your AGI or your adjusted gross income. But these two would be the only options available for students who borrowed loans after July 1. So let me kind of dig a little bit further on that standard repayment term so you can kind of understand how that's going to work. So the new standard repayment plan is that if you have loans that are less than 25,000, you have 10 years to pay back. Anything between 25 and 50,000, you have 15 years. And then anything between 50,000 to 100,000, you have 20 years to pay it back. And if you have loans over 100,000, then you have 25 years to pay that back. Again, this is beginning July 1 of 2026. And then the wrap, you can kind of see here how this works as well. Again, it's an income driven option. So it's going to be based on your incomes, right? And your AGI 10,000 or less payment is going to be pretty much $10 a month, right? But you can kind of see the percentages there based on your incomes that you have on the loan. But for those of you who are graduating in 2026, you have access to all of these that you see on your screen, right? So you have the old standard repayment plan, which was a 10-year term plan, right? So this one, it's a set amount monthly that you're going to be making for 10 years. It's the lowest overall cost of all the different repayment options because it has a shorter repayment term, right? But again, it's a set amount for 10 years. The graduated repayment plan, this one is different. This is also a 10-year term, but with this one, you start with small payments first and then gradually start building up to larger payments. But remember, you got to finish paying this off in 10 years. So it's kind of a balloon effect. Start small and builds up because you got to finish paying it off in 10 years. And then the extended repayment plan that you see there, this one is a 25-year term, right? So, and this is available for students who borrow 25,000 or more. And with this one, it's a set amount monthly, but the payments are all the way to 25 years, right? So let me just kind of give you a quick example. So let's say that you went to grad school and you graduate with about $100,000 in debt, right? So what does that monthly payment look like? So for a standard term for 10 years, it's probably close to about $1,100 to $1,200. So let's just make it easy, say $1,200. So that would be your monthly payment for 10 years. That may not be easily accessible for you, which is why students gravitate to the extended because it's a 25-year term. So in that example, that $1,200 cuts down to $600, right? A little bit more manageable to do for a monthly payment. But if it takes you 25 years to pay that off, that 100,000 that you initially borrowed has basically doubled because you're taking 25 years to pay it off, right? So the great thing about these loans is that there are no penalties to repay these loans back early. So if you wanted to finish paying this off in 15 years instead of 25 years on the extended repayment plan, you can. Same thing with the standard term. If you wanted to pay this off in 5 years instead of 10 years, you can, and there's no penalties whatsoever. The other three options that you see down below, the income-based repayment, the pay, and the repayment assistance plan, those are all income-driven options that are available for you. The income-based, the payee, and the repayment is pretty similar, but a lot of differences. The other ones are based on discretionary income, where the repayment assistance plan is based on your adjusted gross income. So that's the big difference. But again, because you're graduating in 2026, you're going to have access to all of these loans. But I do want to make some notes and a little footnotes here so that you're aware, right? So again, you're eligible for the standard, the graduated, the extended, and the current income-based repayment plans. And you can also opt into that wrap plan that's going to be available July 1. And then current borrowers that are currently enrolled in either income contingent, pay, or save, you're going to have to transition to one of the new options, right? Either the income-based repayment plan, the current standard plans, or the wrap. Those are going to be the only options you have if you're enrolled currently on an income ICR, on the pay, or the save, right? So just make sure that you understand that and how that's going to work and affect. But again, you have until July 1st of 2028 to switch over to a different plan if you are enrolled currently in the ICR, the pay, and the save. So let me talk a little bit about private loans because those are different type of loans as we established in the beginning of the presentation. So private loans, again, it's an unsubsidized loan, basically, where interest is accruing as soon as the money's sent to the school. You'll find that private loans offer you different repayment options while you're in school and when you graduate, right? So while you're in school, they may offer you the option of deferring or making a fixed payment or making interest payments while you're in school, right? So once you chose to make payments while you're in school, you are stuck with that option until you graduate, right? You'll find that most private lenders offer you a grace period as well of 6 months. For my graduate students, it may change. For them, they may have a little bit longer repayment grace periods. For example, law students usually have about 9 months. Medical students usually have about 4 years. Why? Because those students have to do residencies. So they wanted to make sure that they have a longer grace period. But for the most part, undergraduate students have a 6 months grace period, not only on your federal loans, but also on your private loans. And then for any students who are doing residencies or clerkships or internships, there are deferments available for students as well. And if you're having any difficulties in making payments back on your private student loans, you can also use forbearances to help you postpone payments for a period of time. It's just a matter of you contacting your lender or servicer so that they can give you all the details. So let me give you an example of how loan payments work. So again, while you're in school, if you chose to defer your loans, you don't have to make any payments while you're in school. You don't have to make any payments during your grace period. And then after your grace period of 6 months, then you go into full principal and interest repayment on your loans, right? But if you're a student who chose to make payments while you're in school on a private loan, then that means while you're in school, you're going to make either the fixed payment or the interest payments while you're in school. And you're going to continue to keep making those payments during your grace period. And then after your 6 months grace period, then you go into full principal and interest repayment on your loan. So just wanted to make sure that you understand how that process works for private loans. Now let's dive a little bit about delinquency and default, which none of you are going to do. And really, no student should go into default, right? Because if you're having difficulties, all you have to do is pick up that phone and contact your lender or servicer because they're going to do whatever it takes to get you back on track, either finding you a different repayment plan option that's going to work for you and your income, or doing a deferment if you qualify, or through a forbearance to postpone payments until you're back on your feet, right? So when are you considered to be in a default status? You're considered to be in a default status when you are 270 days past due. So that is 9 months of you not doing anything at all, and now very, very bad things are happening to you. So what can happen to you? The federal government can sue you. They can garnish your wages. They can take your tax refund check that you're probably waiting for that's coming here soon, next week. Well, that check will go to the federal government to pay down the loan that you defaulted on. If you need a license to practice your specific profession, maybe you're a nurse, a teacher, a doctor, a lawyer, well, those licenses will not get renewed because you defaulted on your student loans, right? I always get the question, well, what about bankruptcy? What if I file for bankruptcy? This goes away. It does not. This will be with you until you finish paying these off. And if you do go into a default status, it's going to ruin your credit. And it'll be on your credit report for at least up to 7 years. So you don't want to affect your credit because maybe right now you're not thinking about buying a home. But at some point in time in your future, you may want to buy a home, get an apartment, buy a car. Well, all that takes credit. And if your credit is bad, you're not going to have access to any loans to help you pay for those assets that you're looking for, right? So again, any difficulties that you have in making payments on these loans, contact your lender or servicer. That goes for both federal loans and private loans, right? These loans are not going to go away. They're not going to go away in bankruptcies. I always get the question too, there has to be a way that these go away, right? Without me having to pay it back. And there are two ways. They're not the best ways, but there are two ways. One is that you die, and the other one is that you become totally and permanently disabled. Again, not the best options. So just keep in contact with your lender servicer. Don't stick your head in the sand and think that this is going to go away because it's not, right? If you're having any difficulties, just keep in contact with them, and I assure you that they will try to find a solution to help you out. So I also get the question, well, should I consolidate or refinance? And what is the difference, right? So consolidation, this is only done with federal loans. And what is consolidation? It's basically taking all of your federal loans and making one new loan, and they're going to take all the interest rates that you had and find a weighted average and lock you in. That's consolidation, and you can only do that with federal loans, right? As you notice on that slide that I showed you all the interest rates for the past 4 years, it hasn't done really high and low peaks, but if you're wanting to see what that weighted average would be, and if it's lower and you want to take advantage of that, you can definitely consolidate your loans and do it that way, right? Now, refinancing, this is different. This is not the federal government. This is a financial institution that's going to take all of your debts and combine them together at a rate at a new interest rate, right? So my advice to you is that I never like to combine my federal loans and my private loans together because once I do that, then I no longer have access to the deferments available under the federal loan programs. I no longer have access to the income-based repayment options that are available for federal loan programs. I want to be have access to public service loan forgiveness. So if you're wanting to refinance and you have private loans, then I would probably take all those private loans and refinance that separately, right? But again, it's all up to you. If you want to take all of it, because I'm going to be making good money, so I'm not going to qualify for any of the income repayment options. I'm not going to go into the public sector, so I'm not worried about public service loan forgiveness. So if you want to take all your federal and private together, um, just see what that rate is, right? And make sure that that's going to work for you. But again, if it sounds too good to be true, you want to do your due diligence. There are companies that do refinance that are legitimate, but I just want to make sure that you do your homework before deciding to refinance your loans and your debts. And speaking of public service loan forgiveness, I want to make sure that I share this with you because I know Texas Women's has a great nursing program that's available. And this is a great opportunity for teachers, nurses, doctors, district attorneys, anyone that works in the public sector. They can benefit from this public service loan forgiveness, right? So, what is this? So, basically, you have to be employed full time at a government or not-for-profit organization to qualify for public service loan forgiveness. The loans that are eligible for this public service loan forgiveness are direct subsidized, unsubsidized, grant plus, and anything that you consolidated that have those loans in them, right? And then you have to be in specific repayment plans. They can only be the standard term or income-driven options. The extended repayment doesn't qualify, the graduated repayment doesn't qualify. It's only the standard and the income driven options that we talked about, right? So every year, what you're going to do is that you're going to have your employer verify that you are employed full time, and you're going to submit that to the federal government, and they're going to determine if your employer qualifies for public service loan forgiveness. And then if you're making payments on time for 10 years at a qualified employment, then after 10 years, whatever balance remains, the federal government forgives that balance, right? So again, definitely take advantage of this. It doesn't have to be consecutive. It could be that you said, you know what, I'm going to go into the public sector and to take advantage of this public service loan forgiveness. Your incomes may be low, and you're thinking, well, I want to make some money, so maybe I want to go to the private sector. And you go to the private sector for 2 years and realize, no, my passion is not here. It's really in the public sector, a not-for-profit or government job. Then you can come back, but as long as you do 120 qualifying payments, then after that time, then your loans would be forgiven, right? So definitely take advantage of it. You can definitely find more information at studentaid.gov. and they'll give you all the details of how public service loan forgiveness works. And then I want to make sure that you save some money, right? So some ways to do that is that if you want to be debt free as soon as possible, making extra payments is going to really help you, right? Because why? Remember, interest is accruing on these loans while you're in repayment. So if you're able to make additional payments, it'll help to minimize some of that and to help you finish sooner than later to get rid of this loan, right? And we talked about, excuse me, no penalties to pay back your loans, which is great. It won't affect your credit in a negative way. And it's a great thing to do because again, it'll help you to be debt free as soon as possible, right? So if you wanted to pay a little bit extra or make an additional payment here and there, definitely try to do so so that way the interest that's occurring on these loans can minimize as well. And then I wanted to showcase how this works and how the payments go to student loans, right? So whenever you make a payment to a student loan, it's going to take care first of any fees that are attached to that loan, and then it's going to go to the interest, and then finally the principal, right? So this is the flow of how payments go to your student loans. If you wanted to make specific payments to principal, you can, but this is be something that you have to do in writing in a check to send to your lender if that's what you wanted to do, right? But again, this is kind of the way that payments are made directly to your student loans. And then another way to save is that you'll find that your federal loan programs and private loans have what is called an auto debit benefit, meaning that payments will automatically be taken out of your checking or savings account. And by you doing that, they're going to save you some money. They're going to give you a 1/4% interest rate reduction, right? So that's a great thing, right? You want to save some money. And the other great benefits of this is that you don't have to worry about assessing any fees because you're late in making payments, right? So it's kind of out of sight, out of mind. It's being taken care of automatically for you. So you don't have to worry about any fees. And then it's also going to save you some time because you don't have to stop what you're doing, log in, make a payment, and off you go, right? It's going to be done automatically for you. And then again, you're going to get a 1/4% interest reduction just by doing that. So definitely take advantage of that for both your federal loans and private loans. You'll find that private lenders usually offer additional benefits. Some lenders have what is called, if you make good grades and provide a transcript, they can give you either an interest reduction or a credit balance. Some of them also have, if you make so many on-time payments on time, that they'll give you a credit balance or also an interest rate reduction. So definitely take advantage of those benefits that are out there and look at the terms and conditions because you want to take advantage of those because those can also save you a lot of money as well. And then for my students who borrow private loans, if you have a co-signer attached to the loan, this is probably the time to have that conversation with your co-signer, right? So what is a co-signer? This is the individual that signed with you on this loan, right? If the student borrower does not pay back their loans, then who is responsible to pay this back will be the co-signer, right? So now is a good time to have that conversation with them to determine, hey, am I going to be the one to pay this back, or you, my co-signer, are you going to take that responsibility, right? Usually co-signers could be parents, so maybe the parent will say, yeah, I'll take care of this for you, don't worry about it, or no, you're responsible. If you have troubles, we'll help you, but you need to be the one making those payments. So again, that conversation is going to be key to your success. So you want to make sure that you have those conversations with your co-signer. And then to help you manage this whole process, Sallie Mae created a checklist on how to manage your student loans, and it's a pre-fillable document that you can check off, right? You can find it at salliemae.com/student loan checklist. And in the front, it gives you step by step of what you should be doing to prepare to go into repayment. And on the back of it is where you can track your loans, right? Where you can put, is it a federal loan? Is it a private loan? Who my servicer or lender is, their contact information, the amount that you borrowed for that loan, the interest rate, does it have a grace period, yes or no, and then when payment is due. So that way you can kind of keep track of it and make it simple for yourself. But again, this is a free resources just to help you get ready to go into repayment. So, what is my advice to you? My advice for me to you is that you want to get organized, right? You want to make sure that you know exactly what you're borrowing, and how much you are going to have to pay back, right? If that lender or servicer has an app, I would definitely encourage you to download it and make sure to turn on notifications so that you can get alerts when your loans are coming due, right? Definitely, you can sign off for automatic debit there on the app as well. But that would be the first thing that I would do. And then the next thing that I would do is start playing with that loan simulator at student.gov for my federal loans to see, okay, what is my salary going to be now that I have a job? This is what it is. And then by doing that, and by putting the amount of loans that you borrowed, it's going to break it down every repayment option that's available for you and give you an estimated monthly amount that would be required of you. So this is the part where it's really going to help you to budget yourself accordingly, right? And I'm not going to go into too much detail about budgeting, but it's going to be important, right? So while you've been in school, you probably, or you should have had a budget, but that budget is going to be totally different now when you graduate, right? Because why? Because now you're going to have a new job. You're going to have income that's coming in that's probably a little bit higher. And then you're also going to have a new expense, which is going to be your student loan payment, right? So we also created free resources to help you budget yourself accordingly. I'm sure Shalise also has budget tools in her office as well at the Student Money Management Center. But it's a pre-fillable document. You just type it in, and then at the very end, it'll tell you if you're in the negative or in the black. So you just want to make sure that, again, you're budgeting yourself accordingly, so that there are no surprises when that student loan payment is coming due. And then finally, just another congratulations for those of you who are graduating this year and this May. But just remember, if you have any difficulties, if you have any challenges, keep in contact with your lender or servicer. Make sure that you update your contacts. If you move and change your address, let your servicer know that and update that in the app that's available for you. If your email address changes, make sure that you update that as well. You're going to start getting stuff in the mail too from your servicer and lenders because the school is going to report that you're about to exit the university and graduate. So then they're going to be sending you notices saying, hey, congratulations, you're graduating, and now you have to go into repayment, and this is the date that you're going to go into repayments. And make sure that you open the mail and read it thoroughly. And then again, reach out with any questions that you have, whether it be about a repayment plan option, whether it be that you're having difficulties, just keep in contact with your lender servicer. And financial aid office and the Student Money Management Center, those two are still going to be a resource for you even after you graduated, right? So if you have questions about repayment, they can also help you and assist you with those questions as well. So listen, I covered quite a bit of information tonight, but I want to make sure that I leave enough time to answer any and all of your questions. So let me stop sharing my screen and then I can come back and answer any questions that you guys have for me.
That is just fantastic. Every single time, this is a fluid situation, and I hope you guys all appreciate Sergio and all this wonderful information because it changes all the time. So these updates are really crucial, and you're making some important financial decisions at this time in your life. So the chat is open. If you have a question for the general group, please put it in the chat, or you can unmute and just ask Sergio directly. So who has a question? Because I know there's somebody out there who's got something you want to ask. The floor is yours.
Yeah,
Or
feel
else you're so thorough that you answered
feel free
everyone's.
to unmute or put it in the chat if you feel more comfortable that way. And there are no wrong questions. I mean, this is a time to ask the questions, especially if you're about to graduate, just so that you're prepared and have a better understanding how all this is going to work.
I do know
This is,
earlier this week. Oh, go ahead, Cameron.
this is not a question in the chat, but I was starting to think about it as these students are, we're quickly approaching May and graduation, right, Sergio? Should they be contacting their servicers right now, like a month ahead of time? When should they do that?
Yeah, I mean, this is probably during your grace period is probably when you should start doing that, right? Take care of your finals, focus on that, right? Go through graduation, you're good. You have that 6 months grace period. That's the time where you need to start getting organized. So at that point in time, after all, the celebratory things have happened, then this is the time to create an account with your lender servicer so that you can see what you borrowed and what that payment's going to look like and all the different payment plans, and then start budgeting yourself accordingly. So that's 6 months. That's the time that you should start contacting your servicer and lender.
Thank you. And we opened the floodgates because we got some questions with that one. So Joanna wants to know, how do we know how much we owe or our loan balance? Could we go over that again?
Yeah, absolutely. So if you have federal loans, you're going to go to studentaid.gov, right? And there, you're going to use the same credentials that you use to file your FAFSA to get access to the site. And in there, it's going to tell you how much you borrowed, who you borrowed it from, at what interest rate. It'll have the contact information of your lender or servicer. So all that information is going to be there. And within this site, there's also something called a loan simulator that'll simulate what the monthly payments will look like for each of the repayment options available for you so that you can understand, okay, based on my budget, this is going to be the best repayment plan option for me. Now, for private loans, if you're not sure if you borrowed a private loan, then the best thing to do is to look at your credit report at annualcreditreport.com. And in there, you'll see, okay, I've been in school for 4 or 5 years. Let me see if there's any loans that I borrowed during that period of time, because that'll be on your credit report. And then in there, it'll give you the information of that lender and their contact information so that you can set up an account with them as well.
Thank you, Sergio. And then Jasmine wanted to know about, she has a statement and then she's asking if it's correct. So within the next couple of years, student loans are changing. Is that correct?
Yeah, they are. So for my undergrads who are going to be maybe transitioning to grad school, you will not have access to graduate plus loans any longer. This is a loan that was usually used for any gaps that were needed after the unsubsidized portion wasn't enough, and you still needed money for cost of living. That won't be an option. The only options that you'll have for any gaps really be through private student loans to help you navigate those gaps. Other things that are changing is the amount of money that graduate professionals can get, right? So graduate professionals will have 50,000 that'll be available for them in unsubsidized, right? And then parents. There is a loan that's called a Parent Plus loan that a parent takes out on behalf of the student that's going to undergraduate school. Well, that used to be you can borrow up to the cost of attendance, and now they limit that to only $20,000 per student, right? So there's been limitations. So yes, big changes happening July 1. Financial aid is fully aware of those and are working through all of that. But it is going to be a lot of change for students after July 1 when it comes to their student loan options.
Thank you, Sergio. I see Jennifer has a question in the chat, and then Roberto has his hand raised. So I'm going to read Jennifer's question, and then we can get to Roberto. So Jennifer said, "Hi, I had a question regarding how interest works for subsidized loans. I understand that the federal government covers the interest while I'm enrolled in school and during the 6-month grace period after graduation. Could you please clarify what happens after that period ends? Will the interest begin to accrue on the loan at that point? And thank you for your help."
Yeah, absolutely. So as long as you're enrolled at least half time while you're in school and during your grace period, no interest is accruing because the government's taking care of that. So once that is over, that 6 months grace period, then interest begins to accrue on the loans, right? And also, if you're eligible for a deferment loan, like an unemployment deferment, in-school deferment, economic hardship deferment, if you qualify for those deferments for your subsidized, then the government goes back to making payments for you while you're in a deferment status as well, but only for the subsidized loan. The unsubsidized loan, interest is accruing as soon as that money is sent to the school.
you for that one. I think we answered Jennifer's question. Roberto, did you want to go ahead and unmute and ask your question?
Yeah. Hi, y'all. Can y'all hear me just fine?
Yep, perfectly.
Perfect. I wanted to ask, so if I graduated in May, and so I'm gonna have to start all of this, right? And I was looking into right when you were talking about the public service loan forgiveness.
Uh-huh,
Uh, I've been working for Children's for a while, and they're considered a nonprofit.
uh-huh.
And I'm just wondering, and I'm going there, I'm going graduate in another position. So my question is, and I was reading up a little bit on student
Forgiveness.
student.gov whenever you were talking, and for the PSLFs, do you when you apply for one, when you qualify for one, is it and you know you're at the end of it, you make the 120 payments. Um, does it like are all of your loans forgiveness or because mine are like kind of separated, right? By loans. I only have subsidized and unsubsidized. Um, but they're separate. They're not all in like when I go there, the one's like 20,000 and the other one's like 19, you know. Do they all get lumped in and then forgiven or how does that work?
Yeah, they're going to calculate what your monthly payment's going to be based on the debt that you have in federal loans, right?
Okay.
So basically, once you make successfully on time 120 payments, whatever balance remains, the federal government will forgive that balance.
Okay, and that's for all the loans. And I've
All your
only
federal
taken
loans.
federal loans. Yes, I've only taken federal loans for undergrad and grad school.
Okay.
There was a little break in between between undergrad and grad school,
Mhm.
but they're all federal.
Got it. Yeah. So then,
Okay.
yes, as long as they're direct subsidized and unsubsidized or grad plus, then
Hmm.
those qualify for public service loan forgiveness. And just remember, you have to be in a repayment option, either standard or the
Hmm.
income-based repayment option, or the income-driven options, I should say, to qualify, right? But again, every year your employer is going to certify that you're full-time, and then the
Hmm.
government is going to assess if that organization that you're working for is approved for public service loan forgiveness. So every year you're going to do that, and then after 10 years of making payments on time successfully, then whatever balance remains, the government will forgive whatever balance remains.
Perfect. Okay. Awesome. Thank you all so much.
Yeah, congrats. Thanks.
Thanks.
And then we have another question in the chat. Oh, Brandy answered it
Perfect.
so fast, lightning fast. I can still read it out loud if we feel like it would be helpful. Okay. So Jasmine had asked, once I graduate from undergrad and go straight into graduate school, will my student loans be put on hold until I finish grad school? And then I'll start my 6 month grace period before I have to begin repayment.
Yeah, and Brandy answered it perfectly. She says yes, as long as you enrolled at least 5 credit hours that are part of your degree program, and then contact your loan servicer to communicate this and let them know. So yeah, that was perfect response.
Awesome. And then we got another one. So we have my undergrad loans graduated fall 2022 were deferred or temporarily paused all the way up until a few months prior to me enrolling in grad school, which was fall of 24. Graduating now in May, I'm unsure of where to go from here as far as both servicers. My loans are all subsidized and unsubsidized.
Yeah, so Shalia, so go to student.gov since all your loans are federal loans, and there is going to tell you who your servicer is. It's going to tell you who your see what the government was trying to do, or hopefully they did it successfully, is that whoever you borrowed in undergrad as a servicer should stay for your graduate loans as well, so that you make one payment to one person. But sometimes they don't get it right, that maybe you had a different servicer for undergrad and a different servicer for grad school. But with consolidation, you can put them all together and make one payment to one person. So just take a peek at student.gov and see who your servicer was for undergrad and grad. And hopefully it's the same servicer, so it'll all be together. And then you can navigate that way as well.
All right.
Awesome. Yeah, I was gonna say I saw Brandy, you're like a master of the chat. I did feel like it was notable to mention, I didn't want to skip over it. Everyone, if you borrowed federal loans, you do need to complete that exit loan counseling that Brandy was mentioning in the chat, and she did a really good job of including the link, because that'll be a part of graduation and getting out of here.
Yeah, it's a requirement, right, Brandy, that they have to follow that before they can graduate. So yeah.
We also put in a couple of handouts that Sallie Mae has. One of them was the student loan, understanding of student loan repayment, and then just going through and finding all your servicer loans and trying to, it's basically putting together your budget, right? So those have also been dropped in the chat. And please take advantage of all these links that are in here. And thank you so much, Sergio, for recommending, reaching out to Brandy and the Office of Financial Aid if you have any questions. And Brandy did put her appointment link in the chat. And you can always make an appointment with the Student Money Management Center. We will take appointments through May the 1st. And then, of course, the financial aid office is, I don't know, you guys are there all the time. And we'll start taking appointments again in the summer. But we do wish you all the best for those who are graduating. This has been a great session. I learned something every single time. So again, reach out to us if you need help. You're very welcome. Sergio, thanks for your time, and really your expert advice, and just really clear direction. We really appreciate it. It's very calming for these students, I'm sure. And just again, take a few moments when you get that short survey when you exit the Zoom. We really appreciate you doing that. Congratulations again. Go Pioneers. Have a great rest of your spring, and everybody have a nice evening. Good night.
Thank you, guys. Bye-bye.
Everyone.
Just